Hello and welcome to BQ Prime. You're watching IPO Adda, and the company in focus today is Manoj Vaibhav Gems and Jewelers. It's a Vizag-based company, and joining me is uh, Keerthana Grandhi. She is the director and CFO of the company, and Gontla Rakhal, who is the chief operating officer of the company. The company is coming out with an IPO which opens on 22nd of September and closes on 26th. Price between 204 to 215 rupees. It's a fresh issue of 210 crores and OFS of 60 crores. Kirtana, let me start with you. You're raising nearly 210 odd crores in fresh issue. What is the purpose of that?
So, purpose of the IPO is to expand into more rural locations in our region. So, we're opening up 8 more stores in this region in Andhra Pradesh and Telangana put together.
Uh,
So, this is for inventories and the capex.
Gontala, give me a sense of your business model because you're not too much into the metro and tier 1 cities, it's more into tier 2 and tier 3. So, how does this model work for you?
So our primary focus is into this micro markets where we call it rural markets or the district headquarters. So what we feel is there's a lot of demand in those markets. So every year, if you look at those rural markets, the demand for gold is increasing year by year. So in basically in tier two, tier three, they don't look gold as a luxury. So they look it as a necessity on an everyday basis, even for the marriages or the occasion. So we've seen good demand in all these markets, and we try taking first comer advantage in these markets where we try being one of the first organized player in these kind of markets and try tapping the maximum market share we can. So if you look at our existing stores, we are eight of our stores are in these tier 3 markets. So we felt there's a lot of potential in those markets, and we want to go ahead and explore those markets and tap all those unorganized sectors as well.
Give me a sense of how big the opportunity can be because I was looking at your revenue from top 5 or 6 stores. I think Vizag was the one which had the highest in terms of revenue, 62% coming from Vizag alone, and nearly 20% coming from the remaining 4 stores. So, how scalable are these stores that you're setting up in tier 2 and tier 3?
So if you look at the Vizag story, it's been close to, when we are in this industry, and this because this being a headquarter, it's been close to 30 years we are here in Vizag. So you can see a lot of revenue there because a lot of around close to 100, 150, 200 kilometers is dependent on Vizag. I mean, people from Orissa or Chhattisgarh, Vizag is a main headquarter for all these places because when you look at the geography, Bhubaneswar is a little far for the bordering Bhubaneswar, other towns. So, I mean, we don't look Vizag just only the Vizag crowd. You have a lot of people coming in for tourism or for jobs and all. So that's why you see a lot of numbers over there. And if you look at the other 3, 4 stores, all those three we started as a tier 3. Now they started growing up to tier 2. So that's the potential. Every tier 3 in next 4, 5 years will become tier 2. So as a business, we keep growing. As a revenues, the district keeps growing. So we feel a lot of growth and potential is there in tier 3 to become tier 2 and eventually tier 1 down the line.
So, and
So,
also to add on
yeah.
to this, in terms of Andhra Pradesh and Telangana's market, we're right now there are 26 districts in Andhra Pradesh and we're available in 6. And also in Telangana, there are 33 districts and we're available in 2. So there's a lot of scope in terms of how we can scale this place in our home ground first and then eventually move to other South Indian states.
You know, why I was referring to that was that you had mentioned in your RSP that the states of AP and Telangana are growing at 18% CAGR. Is that the kind of growth that you're going to see as well in your store growth or revenue growth, or more than
So in
that?
the past, in the past, we have surpassed the growth of the markets as well. So we have clocked more than 25% of revenue growth each year in the past. So we are hoping to see the same.
So give me a sense of Gontala, give me a sense of the kind of revenue that can come from a tier 2 jewelry store. We seen we cannot compare you with the large format ones which are in big cities because the quantum and the size would be different. But the revenue potential that can ideally come from a mature tier 2 or tier 3 jewelry store, if you can give us a sense of how it is, we can see how it's going forward.
So in tier 2, tier 3, the product mix is different when you look at the tier 1 and tier, the suburban type. So we definitely see a lot of plain gold moving. So I won't be able to tell the exact numbers. So as it's not mentioned there. So what best I can give is if you look at these tier 3 cities and tier 3 towns, you a lot of inventory turns, a lot of rotation over there when you look at tier 1, because it's gold is, as I mentioned earlier, it's a necessity. So they keep buying. So at least 1:3 ratio is what you have when you look at a tier 1 and a tier 3. And operating is more flexible in these areas. So we always wanted to grow in this and tap these kind of markets, and these revenues are always better and easy to achieve, easy to mature when you compare to tier 1.
And what could be the ideal mature store revenue that could means you would have some of the mature stores in these? What would be the per store revenue for them?
Per store.
Per store revenue, we're consolidated. We've given consolidated numbers in our RHP, so we won't be able to give you this thing. But just to give you a sense, we will a break even for a store to mature in a tier 3 would be 3 to 4 quarters.
Okay, because for the tier 1 it's roughly around 2 quarters. So that maturity time also takes time in tier 2 or tier 3, right? In that sense.
Give you a sense, for the 8 stores which we are expanding, we'll have 20 crores of inventory and 1.5 crores of capex. So that's the size that we're looking at. And usually they're a size of about 2,500 square foot showrooms.
Okay, so 20 crores per store, right, Keerthana?
Inventory, yes, correct.
Okay, give me a sense of the product mix, because plain jewelry margins are much lower, and when you go to studded jewelry, the margins get higher actually. So how is the product mix for you?
So as a company, we have each and every option available. So in tier 1 and tier 2, we try having a lot of this studded jewelry, premium emeralds, rubies, and all the stone studded stuff. So when it comes to tier 3, so the mix is more of a plain gold versus the studded. But as a company, what we do is first year when we start the store in a particular tier 3 area, so first year it will be more of a plain gold. So as a business, we feel trust is a main important thing in jewelry. So after 1 year, relationship with the town and the district, and it starts growing. So from second year onwards, we saw that this growth of premium jewelry in even this tier 3, once the family or the customer starts gaining trust over the awareness and the education what we give. So I've seen the revenues grow even in the premium sector as well after a year or something like that.
Because there'll be generations living together, and right now with the increased information, the newer generation would also explore like the semi-precious and antique kind of product offerings as well. So we offer an aspirational range to all our stores so that they can also see the availability of the product, and we also can quote better margins.
How easy is it to operate in tier 2 and tier 3 compared to tier 1? Are the cost of operations much more lower compared to tier 1 for you?
Yes, if you look at the operational wise, it's there's a lot of difference between tier 1 and tier 3. When you look at the commercials, the rentals part of it, it's it's way lower when you look at a tier 1 metro city. And when you look at the salaries, and when you look at the economics, when you look at the lifestyle of person, so that's related to the how much they earn. So keeping all those things in mind, and when you look even the interiors or the theme and the concept, everything is comparatively way cheaper, and the manpower is cheaper in tier 3 as well. So keeping all those things in mind, definitely operations it's way cheaper in tier 3.
I was going through your margins, Keerthana. EBITDA of 100 crores in FY23. It's marginally lower, but EBITDA margins have also at 5% odd. What should be the industry average? I'm talking core EBITDA margins here.
So our EBITDA margins are 7.1% in FY23, and we've grown to 7.3% in FY24 first quarter. So also we've seen a good PAT margin from 2.6% in 2022 FY to 3.8 in this first quarter 24. So
But
we've seen.
But the 7% margin seems to be much lower than the industry average, right?
No, we're almost at the par, and we're also targeting these places because in South India it's predominantly gold and premium gold. So these are the margins that we have, and we're almost at the par with the rest of them.
What is the timeline for setting up or opening the 8 stores that you are planned?
So we are expecting to open all the 8 stores somewhere between 6 to 8 quarters, depending on the location and depending on availability of the building. So on an average, 6 to 8 quarters is what highest we're looking at.
And you are looking to be centralized in AP and Telangana only, right?
Oh, I mean, we started exploring even other states. So what we do before opening a store or before we explore other areas, we try doing at least 6 to 10 exhibitions depending on the area. We'll so that we know the traditions, the custom, the culture, the ticket size of each and every region. So we do a lot of market research, and we do, I mean, simultaneous exhibitions. They generate revenue as well. So, I mean, looking on keeping those factors, we plan exploring to other cities as well. So, if you look at it, we started exploring in Orissa, bordering of Vishakhapatnam, Andhra Pradesh, and we started exploring Karnataka, which is bordering Telangana as well. So, I mean, we are definitely looking at other states, but primarily at this gesture, we are looking for these 8 stores and expanding in Andhra and Telangana. Eventually, our plan is to grow to other states as well.
You have 2 franchisee stores. Is that the model that you want to go forward with to keep it light at your end?
Yes, I mean, we are looking at that option as well. We just started 2 years back. It's working out well. So we are looking for good families, good partners who can be associated for us with the company and with the family for quite some time. So simultaneously, we're looking that option as well. Wherever we get it, we'll definitely take it and go ahead.
But the 8 stores which we're opening are going to be
Company
company
owned
owned.
stores.
Okay. And how do you, what kind of margins and what kind of growth rates that you see in the franchisee model? Because in the industry, we have seen either people go for company owned. There's some in from the Eastern Indian markets where they have a franchisee model. How's margins for you in the franchisee model?
So these are franchisee owned and company managed stores. We'll be able to give you only a little information about this because there's not much in the RHP. So obviously, because they're franchisees, we have to give them
But is
their own bit of share.
the margins higher than your core margins, or it's lower than core margins?
Again, it depends on the area where the franchise is, but end of the day, company is making money through that channel as well. That's for sure.
And how does the model work? The franchisee has to have the inventory, or you manage the inventory for them?
No, we are working as a franchisee owned company managed thing, so that when it comes to a customer, no one gets to know which is a franchisee, which is a company owned, because we want to give that kind of experience, so that there's no differentiation in between the stock or the treatment or the service to the customers.
Give me a sense of the average revenue per store that you are getting as of today.
So we have a consolidated thing,
Yeah.
so we won't be
Consolidated average revenue?
So total, I mean, 2,000 plus crores for FY23 for 13 stores is what we have done.
And per store, you don't track sales sales same store growth per quarter or on a monthly basis.
Yeah, so same store growth has been 22% in FY23 and 24 to 25% in FY23 as well. 22 was 22 and 23 was 25%.
Okay, and that's the kind of growth that you expect in this industry as of today. I mean, you can't
So
comment for the future,
our
but
past trends have been in line or more with the growth of the market. So we hope and pray it stays the same, and we are working towards it.
and so when you say that you need 3 to 4 quarters for any store to mature, what is the level of when do you consider a store matured? Means in what sense? When it's making operating profit at?
Yes.
So it takes 4 quarters for a store to start making operating profit there. Okay, give me a sense of why have you limited yourself in AP and Telangana only? Because southern markets is a huge market for jewelries and gems. Uh, you haven't, means you said that you're looking at Orissa, parts of Orissa and Karnataka, but you have a large history of being present in this industry. So why have you only limited yourself in AP and Telangana?
So if you look at to put AP put together the United Andhra Pradesh or the divided Andhra Pradesh as of now, only in Andhra Pradesh after the division there's close to 26 districts now. So we are just present in 7 to 8 districts, and throughout Andhra and Telangana we are quite familiar as a brand, and we have good brand loyalty as well. So our target is we want to capture that trust from the customers, and we want to give the service. And once we finish up something, we get good chunk in the entire Andhra and Telangana, then we want to move eventually, rather than going somewhere and again coming back to Andhra. So we want to do this thing simultaneously, look at other areas as well.
What is Keerthana, what is the kind of debt you have on your books, and how much of the debt means you're not going to pay off any debts because you're going to use it for your store expansion, but what is the total debt and how do you plan to bring it down as well?
So for the CC limits, we have around 360 crores, and the rest would be the GECL loans. Those are for term loans, so they keep. So at the moment, our debt equity ratio stands at 1.27%, but the IPO proceeds at the moment are strategically used to expand the stores.
And do you need a higher working capital requirement as well as you increase the stores?
At the moment, we're comfortable. We would we would be running in the same fashion, and obviously, in the jewelry industry and women being part majority, we would always love to have more choice. So we want to operate at the minimal level where the business grows, and also satisfy our customer base as well. So.
Okay, thank you very much for joining us today. Your IPO is opening on 22nd and closes on 26th, price between 204 to 215. Thank you for watching IPO Adda.